Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so looking at the XJO today, things are looking much more promising once again after a few weeks of negative markets. We're now pushing back up through that 71 resistance level. 71 has been a very strong level for this market since early April. We saw a temporary break above that early May. Wasn't maintained. We saw a typical May pullback. We're talking about this May pullback for quite a while. No surprise. That May pullback got us back to that 200-day moving average as well as pretty close to where I'm drawing my uptrend line. So the technicals are very sound at the moment. We've got a break of a pennant to the upside. We've just gotten through the next key resistance level. So things for me are looking rather bullish, okay, and bullish back to the most recent resistance that we've formed up here just below that 72 level. If we crack through those levels, then we're finally going to be well and truly into an all-time high. So coming sessions are critical. At this point, the US futures are pointing to a higher open again tonight. They are also going to be heading towards or close to all-time highs. And you can see that here on the S&P 500 chart. They had a fairly positive night last night. It's bringing them very close to the all-time high here under that 4,250 level. So futures are bringing us pretty close to that. I'd dare say we're going to test that this week, and whether that breaks through or not is really going to dictate what happens next. So all eyes on the S&P 500 resistance here. All eyes on the XJO resistance just below 72 as well. Yeah, if that holds and we see a bearish signal, then it looks like we're going to be holding sideways for a bit more time yet. But a breakthrough is going to be a nice signal that people are still keen to buy at these levels and push higher. So just some of the things to look out for. We're seeing more and more news around supply chain issues. So that is one of the driving factors behind supply problems. Okay, that's also one of the driving factors that will be behind any inflation that we see moving forward. Okay, these supply chain issues will generally be temporary in nature, especially as we're starting to see more and more vaccines being rolled out and more economies reopening again. So look, this is something you're going to bring into consideration in forming any market view right now, especially around inflation, is how supply chain issues are going to affect the economies overall. Not only that, but particular companies that it could affect too, especially around tech. Okay, we're hearing more and more of this, where JB Hi-Fi is a prime example that I like to use. We had the new PlayStation 5 release last year, and it's very hard to get your hands on one. That's a lot of lost revenue for companies like JB. Okay, so these types of problems, it's going to be a little bit more stock specific, I think, but it is definitely something you want to be keeping an eye on, in particular around some of those consumable stocks. So the next thing obviously is China tensions. We're seeing that really kick into the miners over the last few weeks. China came out to say they're going to target anyone speculating on iron ore. Obviously, they didn't like the iron ore price getting up to 230 US a ton. They had to come out and say something. There's no real evidence of high derivative speculation. If you go look at the Dalian futures contracts, there's not a big spike in volume in the last few months or anything like that driving the price higher. So I'm not too sure who they're targeting exactly, but sometimes just an announcement like that is enough to get people off that gas pedal and hit the brakes, and that's what we've seen. Okay, so they've hit the brakes on the iron ore price. It's come back below 200 US. So really at this stage we think that's probably the job done. We might not hear too much more from that. Iron ore, still looking for the bottom, guys. We may have found it here around the 1001 level on the futures. We saw a big bounce from that level yesterday, but we're still not quite convinced that we found the bottom. So let's just wait on this space. But guys, it's not just iron ore, it's also Australian gas providers. Go look at Woodside and Santos over the last few weeks. Obviously there's a few alarm bells around that as well. So watch that space closely. We don't have any real defined restrictions just yet. It's all just hearsay. But this news is just still progressing as time goes on. Infrastructure spending, we're still waiting for a infrastructure plan in concrete from the Biden administration. That still could be a while off. Nonetheless, could be one of the next big catalysts for our market one way or the other. If they pass that through, we'd expect certain areas of the US market to perform extremely well. I think that is also what's holding them back a little bit. Okay, so if we see some true progress there, if we start getting a bit more of a timeline on when that could be passed, that's where you can really get another big strong run out of the S&P 500, and that'll just drag us along with it. The other thing probably lay mention on that's hit us today is we've got 5 cases here in Melbourne that has caused the government to really quickly come out and put some small restrictions on us with mask wearing and public gatherings. This could be just the start. Just watch how this progresses out over the week or so. Travel stocks have had a lot of attention from the US, and therefore our travel stocks have gone up as well over the last few sessions. I'll be curious to see whether anything happening in restrictions in Melbourne is going to affect that space or not. We already saw New Zealand temporarily pause their arrangement with us. Okay, so yeah, look, this could be just the start of something, guys. Just keep an eye on it. If things get a lot worse like it did last time, expect the travel stocks to pull back. Expect things like the financials also to pull back. Okay, so they're typically those types of sectors that pull back on the back of restrictions. Look, at this stage, probably nothing, but just keep an eye on it. But look, guys, all in all, markets have everything they want right now. You've got plenty of central bank stimulus being splashed around. There's no real sign of when they're going to turn the tap off. RBA is still sticking to their timeline on interest rates. So 2024, we've still got a few years. There's a few spectators out there talking about interest rates going up sooner rather than later. There's nothing confirmed from any of the central banks that this is going to happen. Okay, so also that the central banks have flagged that they're happy to weather some inflation. Okay, so look, this is going to be interesting to see how this plays out. But at this point of time, there's no defined bit of news suggesting that interest rates are going up or they're going to taper any of their bond buying programs that they're doing right now. Okay, so for the next 6 months, we feel we're kind of safe on that in that regard. Any pullbacks that we see in the market, we'll be looking, okay, has anything really changed? Yes or no? If no, buy the pullback. If we're starting to see some defined news directly from the Fed suggesting that they're going to taper, then that's a different story. But the recent pullback that we saw has been a great buying opportunity on the back of people worried about inflation, worried about interest rates. Well, a bit too early to worry about that is our view at this stage. At some point, we will need to worry about that, but it probably won't be until the next few years. All right, so really, all in all, that's where we're at. Markets are likely to break higher. The time frame of that it could be weeks or months. It's always really hard. The typical cyclical pattern that we see through this time of year is a pullback in May and then a slow but steady push up into that July-August reporting. All signs are suggesting that could play out this year. It's all looking pretty positive at this point. Okay, so that's really it for this week. Thanks for listening in. Bye for now.